This is the MTPredictor weekly market update for June 7th. I'm going to start with the S&P here, and remember we came into, I'll take this off, our daily decision point resistance level. I'm just going to take a manual resistance level here. Right, this is an area we anticipate the market may turn in that level and start trending to the downside in terms of the daily chart here on the short side. Here's your next daily support. Okay, now we came off of some intraday chart 15-minute support on Friday, and you can see they rallied back up there on Friday. We'll see. We got still have some room to the downside, maybe around that 2060, 2070 level, and then 2050 is the next daily support there. Anyway, this is an area we were anticipating a turn. Same thing with the Dow. The Dow reached the decision point resistance. You see the red sellers candle here indicating that sellers were overcoming buyers in the resistance level, and we get the move away. Right, same thing happened with this was a software generated sell signal because there's also divergence in the decision point resistance area up here. Right, if we take a decision point off of this level, okay, here's the next area where we saw the correction, right, and now we're in another level here. So these levels are very, very good at looking at turning points in the market. And the other thing we were looking at is the fact that the Dow Transportation Average never confirmed the new highs. In fact, the Dow Transportation Average, which is more sensitive and it should lead the markets higher, was actually in a wave 5 heading lower. You can see we went all the way down to the maximum wave 5 target here. This TS2 sell signal was just an ABC correction in wave 4 with the wave 5 targets here. So we went all the way down to the maximum wave 5 before we begin to rally here. So we were anticipating, based on what we're seeing here, that once we hit those resistance levels, the Dow Transportation Average not confirming those highs, that markets would roll over, and in fact they have. We've also seen a lot of big money going into volatility. In other words, as the VIX rises, that volatility index rises, we see the S&P move in the opposite direction. There are reverse correlations there. Right, and it's June, so I think the next Fed meeting is scheduled for this month. It's not this week, but I forget which week it is, but we'll deal with that when we get to that. But the market probably going to start preparing for that potential move in interest rates or not. I was listening to it was Dr. Doom. He's looking at, instead of interest rate hikes, he's looking at QE4 here in the U.S. So we'll see how that plays out. I want to take a look at the euro here because it's been a little bit since we looked at the euro, because we're looking on the weekly chart, and we had the wave 3 completed. We were rallying into wave 4, and we said look for the red sellers candle in the wave 4 pullback here, and then we're going to project our wave 5 to the downside here. So we're anticipating after the wave 4 rally that would roll over into potential wave 5, retest the monthly support here, and this basically was the area where Mario Draghi confirmed the ECB their commitment to quantitative easing in Europe, and things rolled over there. So here's the minimum wave 5 target here, just below the monthly support. This is a large area of support. I don't think this is just going to give way easily, but just below the minimum wave 5 target would be parity with the dollar there. So it will be interesting to see how that plays out. Right, and finally here we'll take a look at gold. Well, maybe I'll take a look at the dollar as well. I want to bring the dollar in here, but this was the sell signal on the weekly chart in gold, that wave 4. Again, we reached the wave 5 target and the monthly DP supports, and we had each of these swing highs on the weekly chart has been a lower high. Right, so that's a negative pattern, if you will, and gold once again made a new swing here, has rolled back over, getting close to retesting the level here. That'll be the third test if we get in that level. Right, we do have room to move to the downside if this level does give way. but so far buyers have stepped in at this level and supported gold, just around that 1150 level. So we'll see if that continues to hold and get a little minor, this is, well, we'll call this the next weekly support here. Let me move these over. Right here, off the last swing here. In fact, you'll have a couple of levels right in the same area of support here, all the way down to 1100 in gold if this weekly support begins to give way. So the only thing that will change the picture in gold is if it starts taking out these prior swing highs. That would change the the bias, I think, more bullish than bearish. Right now we're still more bearish in gold here, maybe retesting that weekly lows. And then finally, let's look at the dollar index, because this also, we had a wave 3 on the weekly chart, pull back into wave 4 here, but on the daily chart we were looking at the potential. Here was the monthly significant high here, the initial move down, the first ABC correction with a TS3 sell signal. This we look at as a potential wave 1, the ABC, and a wave 2, and we're looking at a wave 3 target here in the dollar, but we'll see. It's reached the minimum wave and typical wave C targets. If you are short this, certainly have your stop to break even there, but we'll see if this eventually does work its way down into the weekly wave 4 and the daily wave 3 target here. Alright, so we'll wrap it up here. Again, a little slow on Monday in terms of news. Things will pick up on Tuesday, and then heading into Friday with the PPI and consumer sentiment, and then coming up this month the next Fed meeting. So enjoy the week. We'll see you back next week.